So, good day once again. So, we are on the last part for our introduction to accounting. So, the third part, which is the third chapter, this is just a very, very short chapter. It talks about the language of business. So, accounting serves as the bridge of communication. Why? For the business to let the users understand what the business is all about, you use the accounting or the financial statements. So how do you prepare financial statements? You use the accounting cycle or the accounting process. At the same time, for the users to understand what transpired in the business, get information regarding the business, they would again look at the financial statements for them to understand what has transpired. So the business would also understand what happened in their operations, like the business is losing, they're looking for a trend on their sales. How do they understand the users? So they look at their financial statements in the different or comparative years. Like for example, in this year, why is the sale of item A higher? What does our user want? So both ways, the business and the users would need to understand each other in the form of accounting. So when do accountants prepare financial statements? So we already discussed the different principles in which we have the continuity or going concern assumption. So this assumption thinks that the business would still continue operating for a longer period of time. So we need to prepare financial statements. But when? How often? So we have here different accounting periods. So we could report financial statements monthly. So as discussed on the previous PowerPoint presentation. So monthly is every month, quarterly is every 3 months, semi-annually is every 6 months, and annually is every 12 months. So the accounting periods, so usually there is only two. It's either fiscal year or calendar year, but let's talk about first fiscal period. So fiscal period is any accounting period of less than a year. So what are those? So the monthly, semi-annual, and quarterly. So is that really commonly used? So there are some businesses that they would prepare financial statements in less than a year. That's what you call interim financial statements. Why do you prepare that? Like for example, today is August. The month is August. So here comes one business. They want to have a loan in the bank. So what would they do? The bank would require the current financial statements of the business. So the business could not say, wait, we do not have it yet because it's still August and we need to end December for us to make one complete financial statement. So you could not say that because the bank requires the current. So if you started January, so that is January to August, that is less than a year, that is interim financial statements. So that is fiscal period. But when you talk about accounting period, when you render financial reports, so you need to consider the calendar year and the fiscal year. What is calendar year? So by the name itself, calendar. So calendar starts with January and ends with December. So a business that choose accounting period of a calendar year, so you would record your transactions from January 1 until December 31. While fiscal year is still a 12-month period, but it will start with any other month except January. So if it starts February 1, so that would end January 31. while natural business year is the 12-month period that ends on any month when business is at the lowest or experiencing slack season. I have presented it here, the I. So first is faithful representation. The information shows what it purports to show. So, in other words, the financial statement should be adequate. So you must report all the actual events and their respective amounts as objectively as possible. So you do not just want to estimate the amounts. You must be objective. There must be a basis. Next is neutrality. Financial statements or financial reports should be fairly presented and must be free from bias. Again, there is an emphasis of being unbiased. So it must be directed towards the common interest of the users. Next, conservatism. So under this, when alternatives exist, the alternative which has the least effect on owner's equity should be chosen. So if there are doubtful alternatives, you would choose between understatement of assets and income and overstatement of assets and income. The former is preferred over the latter because you need to be conservative. So you would expect or anticipate no profit and provide for all the losses. Why? You do not count the eggs until it is hatched. Like for example, ganang style nato nga, anak ako'y paaboton nga allowance, sige mo gasto ko ron. But you don't know in the future what would happen sa bakuhay na may tabo and you are not able to receive the allowance. So what will you do? Gautang-utang na. So, conservative ka, expect for the losses. Do not expect daan o profit. Completeness. So it is said to be complete if it contains full disclosure of significant information necessary so that the financial statement will no longer or will not be considered as misleading. So it should contain notes and supplementary schedules and other information. So here comes the notes to financial statement. And lastly, substance over form. So financial accounting would emphasize the economic substance of events even though the legal form may differ from the economic substance and suggest different treatment. So like for example, kaning common ni example nato. Common ha, although this is not really that accounting, but for you to get the picture. What do you prefer? A simple looking girl but intelligent or a very maarte pero bubblehead? Diba? Mahalon o gamit pero walay kwarta sa bursa. Is that substance over form? No, that's form over substance. So, very rich, you are a billionaire but you dress simply. So that's substance over form. Next is relevance. So relevance means that the financial statements are prepared intended to help users make informed economic decisions. So we have here 4 items for it to be relevant or you need to consider relevance. First is materiality. So it is focused on the size of the item in relation to the total of the group. So is 1,000 a big amount for a billion? The size of the company in terms of total sales or capital. So is the sales of 10,000 big enough for PAL? Oh, 10,000 is big for an ordinary sari-sari store. But for PAL, Philippine Airlines, is that big? No. Nature of the item. Next is predictive value. enables the users to forecast and make predictions about the outcome of future events. So it's also important that you could be able to forecast future events. So with this, increase your sales, or na by chance na muos-os. Then feedback value enables users to confirm past predictions or correct earlier predictions. Timeliness must be available at the time of need, or else it will defeat the purpose. So what's the use of preparing financial statements? You need it today, but nahimo lang by December. It's useless. Comparability, it can be compared with other companies with the same line of business. So same standards or same way of presenting your financial statements as compared to other businesses under the same line. Consistency, you must use methods or practices the same way as you used that on that period. But on the next year, you could change it, but it is subject to disclosure. So next is the types of accounting information. We have here 7. So financial accounting, it concerns primarily in describing the financial resources, obligations, and activities of an economic entity, resulting to the preparation of general purpose financial reports on financial position and operating results. Auditing, so it is classified into two, internal and external auditing. So internal auditing, those are the established accounting procedures followed throughout the year. Uh, it concerns strict adherence to management policies and measures the efficiency of operation. It's more on the internal, it's for the internal transactions. So it is performed by own employees or staff of the company. While external auditing, it is performed by an independent professional accountant who critically examines the book of accounts. Then, he or she would render an opinion on the fairness of the financial statements being examined. Next, accounting information refers to management accounting. So it is primarily concerned with the designs, installation, and improvements of accounting system intended specifically to help management in running the business. Tax accounting, this is more on the preparation of your tax returns for you to be able to determine the correct amount of taxes due and payable to the government. So this tax accounting is not only on the preparation but on the tax planning, so that you would be able to know the tax effects of business transactions. Financial management, primary concern of this accounting information is to set up financial planning objectives, including the sources and application of its resources beneficial to the economic entity. Cost accounting concerns primarily on cost collection, allocation, and control of producing goods and services. So how do you do costing of your items? So considering the cost of your raw materials, how much would you sell that? So that's cost accounting. Now, government accounting, so proper custody of public funds. So those accountants working in the government, so mga LGUs, NGOs, GOCCs, so they practice government accounting. Mhm. So we have different users of financial statements. We have investors, employees, lenders, suppliers, and other trade creditors, customers, government and their agencies, public. So you don't expect these users to have a complete background of accounting. Some may have a brief overview, but some really have no idea at all. So on the part of the investors, they need the information to help them determine whether they should buy, hold, or sell. Shareholders are also interested in the information that would enable them to assess the ability of the enterprise to pay dividends. So you do not invest if you will not gain anything from it. So employees. So why are they interested? It is because they want to know the stability and profitability of the enterprise. So you do not work in a business in which you are sure that it will go bankrupt. Lenders. They are interested because it enables them to determine whether their loans and interest thereon will be paid when due. So, di ka magpahulam if you know that the business establishment is not capable of paying their dues. Supplier and other trade creditors, so that they would know whether the amounts owing to them will be paid on maturity. Mabayaran ba sila? Customers, so you may ask, why are customers interested in financial information of the business? Because, especially those who have long-term involvement with or are dependent on the enterprise, you are interested whether mulahutay pa ba ang business or not. Government, all the more, they want to know the taxation policies, or they are paying well enough for their taxes. So public, it depends on what is your purpose of having a relationship with a business. So, are you the suki? So, some suki would be sad if malugi ang business. If they are your suppliers, so it would also affect your business. So, it's the general public. So, nature of business, we have here 5, but basically, there are 4. So, service concern. So, in accounting 1, until midterm, we focus on service concern. So you get your income from services. So rendering your profession, that is service concern. Merchandising, you know this. This is buy and sell. Manufacturing, when you produce your own products. Agriculture, so when you plant crops, then you want to sell them. So those are the 4 basic. So in the book, it includes hybrid companies, wherein it involves more than one type. But basically, there are 4. Why? Most businesses today, it is a combination of 2, usually, or some 3. Why? You buy and sell. At the same time, you make your own products. Plus, sometimes you also plant your own crops, then you sell them. Diba? Like, for example, ICM, although dili crops na ilaha, they have anong eggs, ilaha man nga product. Even, I think, their meat, or their chicken ba na. Anana sila meat. Then, there are some products na sila pwede himo, ana. So, I think they have their own bread. So, that's manufacturing. Then, merchandising, the most common sa ICM, that's buy and sell. So, it's a combination. So, basically, there are 4. But ang common good is tulo: service, merchandising, and manufacturing. Not all are engaged in agriculture. So, I think this is the last topic: forms of business organizations. So, single or sole proprietorship. This is a kind of business organization owned by only one person. So, the owner is called proprietor. So, its capital component or capital account under the statement of changes in owner's equity. So, you would see it this way. So, this is similar. So, it depends if naa by law. So, in this case, my example shows if it's profit. So, the beginning equity, add profit, then you minus your drawing, you will get the ending owner's equity. Next is the partnership. So, you have 2 or more owners called partners. So in the partnership business, you need to have an agreement. If that is a business, you need to register that one in SEC, or Securities and Exchange Commission. So you will make your articles of co-partnership, wherein you will write all your agreements. So partnership, this will be handled in your next accounting subject, which is accounting 2. So the presentation of your partner's equity, you could do it this way, or simply write, pwede one column na siya, you'll write the name of the first partner and then the second partner. You could consolidate it. But basically in your book, that is our reference, it is presented this way. Corporation, this is your accounting 3. Take note, it is organized. So what is organized? It is started by at least 5 but not more than 15 natural persons called incorporators. So this will be well explained in your accounting 3. Then the corporate charter must be registered also with SEC, but it is now called the Articles of Incorporation. And the capital account, as what I've said a while ago, it's called shareholders' equity. So this is the format, the contributed capital. This is just a short version. So this is actually long, but just for an overview of what is the difference of the single proprietorship, partnership, and corporation. So you would see that there is ordinary share and add retained earnings, but the details of this will be presented in your accounting 3. So what is written on the right side, this is a different financial statement. This is the statement of retained earnings, but karon wala na ng statement of retained earnings. It is already part of the statement of changes in owner's equity. So again, this is to be discussed in your accounting 3, so don't worry. You just know the definition and the what's the name of the equity portion, who are the owners. So the owners here is called shareholders. Then you have the document of articles of incorporation, which should be registered with. Cooperative is similar with a corporation, but their charter is called Articles of Cooperation, and is registered not with SEC but Cooperative Development Authority, that is CDA, that is a different organization. Then the capital is called members' equity. So there is no separate subject for this. It's just being introduced, just an overview, but our focus here in accounting is in accounting 1 is single proprietorship, wherein there is only one owner. Then it will also discuss the service concern and merchandising concern.